This is the greatest financial asset bubble in history. There is no soft landing to this, period. There is no magic way to get out of it. If I'm right, you're going to save your assets, while most people are going to lose them and never get back to even again. This is once in a lifetime. This is not another recession. It's not another 20% stock crash. This is going to be the biggest crash you have seen in your lifetime, more comparable to the 30s, not quite that bad, and that you will see for the rest of your lifetime.
The world is racing against time, trying and failing woefully to stop the impending collapse that experts agree will be the worst economic downturn of our lifetime. Blackrock, the world's largest asset manager, says there is no soft landing, and central banks will have to plunge economies into a deep recession to stop inflation. Economists are also warning of a Eurozone collapse, with the biggest financial crisis in its history if the European Central Bank wrongly tackles surging inflation. The world's second largest economy is facing a growing financial crisis that threatens the core of the once buoyant economy. Meanwhile, falling bond yields leave the Bank of Canada with one choice: more aggressive interest rate hikes that would certainly plunge the already strained economy into a deep and nasty recession. Despite the recent reprieve in the markets, a prolonged period of economic downturn faces many of the world's economies, putting investors at risk of losing everything. Experts say it's going to be long, nasty, and brutal for everyone. Brace for the ride of your life as we bring you this eye-opening clip from renowned American author and financial newsletter writer Harry Dent. Don't forget to like this video, drop your comments in the comments section below, and subscribe to the channel for more videos like this. Let's dive right in.
Okay, a crash like this, you'll see 3 waves of crash. What we've seen is the first wave down. And of course, that's the most important one, because if it's 10 or 20%, then it may not be the beginning of a larger crash. We can always go to new high. This one was 35% on the NASDAQ, 25% on the S&P. So that 30% plus range qualifies it as yes. This looks like the first crash, which means now we're in the bounce from that crash where everybody's gonna say, oh, it's over, and one good jobs report, okay? You know, how much is job stuff? We're still catching up from COVID and stuff. So we are in a recession. All the signs point towards a recession. Everybody says it's gonna be shallow. That's what the experts say every time we have a recession. Here's the truth about this thing. This recession, it started in 2008-9, which is really more a depressionary period from such a bubble of such a magnitude. That should have been deeper and longer. That crash should have gone into mid-2010 and been a lot deeper. Stocks should have been down 80%, not 50-some%. So they blew us out of that. Now, despite stimulus, they overreacted to COVID, which was a huge mistake, because now they have to tighten because they overreacted to COVID, and COVID is a temporary crisis by definition, not a long-term crisis. But the economy is getting weak again. Now I'm just let people figure something out for yourself real quick. Let me tell you what happened during COVID. $5.1 trillion in fiscal stimulus and $5 trillion in monetary stimulus in 2 years, almost half of GDP, and we're already falling into a recession again despite that, okay? It shows what I'm saying. The economy is weak because the baby boom peaked back in 2007. We're in the weakest part of that downturn demographically, the biggest demographic downturn in history, until about 2024, still a year and a half from now before we start to recover. So this downturn is going to have to be deep to wash out all the debt and all the bubble stuff. We can't just come roaring out of this and say we're over it. This is the first wave down. We may be close to the end of this bounce. So consider, here's how it goes. A first wave crash down, 2-wave counter trend, okay? Retraced 40 to 50%. We've retraced about 40% now, so this could be over soon. Then you get the next wave down. That's called the 3-wave. That should be the same size and length of this wave or more. So we're probably gonna see another wave down from sometime this month into January of next year. And if the market's down into January 2023, just the January indicator would tell you the whole year is gonna be down. So that'd be the next wave. Then you'll get a bounce. and then the final wave will come into late 2023 or early 2024. That's what you should expect after a bubble of this magnitude, especially one that's been stretched and stretched and stretched. The economy's never been able to wash out all this excess. 600 trillion of financial assets that are more overvalued than any time in history. Frankly, and I've showed this in my newsletter, we've been telling our subscribers is we have $600 trillion now in financial assets, 6.5 times GDP globally, and that normally would be 2 times GDP in normal time. So this bubble has to unwind. That means hundreds of trillions of dollars of financial assets. What is that? Real estate, stocks, bonds, commodities, gold included in there, all have to deflate back down to normal so we can come out of this. And we have to flush out bad debts, the highest debt ratios. Can't even compare the debt ratios globally and domestically to the roaring 20s and past bubbles like this. So people need to understand, this is the greatest financial asset bubble in history. There is no soft landing to this, period. There is no magic way to get out of it. Now that this thing is cracked this far, I've been telling our subscribers for months and years now, it'll come to a point where they keep stimulating, but it's not enough and the economy breaks down anyway. We are in the beginning phases of that, and it's very, very likely this is going to continue. So don't listen to all of the clueless economists that never thought this could happen in the first place and saying, well, this will be a mild recession and the worst is over. I am telling you, it is not. And you are risking your assets if you do not take this seriously.
Despite recent bullish sentiments, the Federal Reserve has promised to keep raising rates until it sees compelling evidence that inflation is coming down. Federal Reserve Chair Jay Powell has also warned that further surprises could be in store for investors. Experts also agree that stopping inflation is going to hurt. The markets seem to be oblivious to these warnings, falsely hoping that interest rate hikes will stop and things will return to normal. But the global economy is far from normal. We've had 2 decades of reckless monetary policies, and now we must pay the price. According to Harry Dent, here is what you can do if you don't want to go down with the train wreck.
All you got to do is be more conservative, be in the highest quality bonds while this crisis is happening. Now, all you need to be is out for about 2 years to let this happen, okay? If I'm wrong, you'll miss some minor gains after things have gone up so much that they're so overvalued. If I'm right, you're going to save your assets while most people are going to lose them and never get back to even again. This is once in a lifetime. This is not another recession. It's not another 20% stock crash. This is going to be the biggest crash you have seen in your lifetime, more comparable to the 30s, not quite that bad, and that you will see for the rest of your lifetime. That's what I am saying. What I said from the beginning is key. I've been waiting for them to get caught in their own trap. What they did was they've been stimulating ever since early 2009. And every time it slows, they just up it exponentially. They printed more money just in the last 2 years of COVID than they did in all the cumulative 13 years before that. So they've been escalating stimulus. The problem is they overreacted so much to COVID, which to me, you don't need to overreact to. Everybody can understand that you get a huge virus that makes a lot of people sick and closes down some businesses, that the economy's gonna slow. It doesn't mean there's something wrong with the economy and somebody made a mistake. It's just a natural event. No, they know they have to keep the economy going no matter. So they overreacted. $10 trillion of stimulus in 2 years, 50% of GDP, to the point now that they have to tighten. They force themselves in a tightening cycle, and the difference between me and the government here is I'm saying the economy is so weak that this tightening is going to fail faster than they think. First of all, yes, they will do this. I'm saying because they've gone in this direction, it's hard for them to change so suddenly, so soon without showing a bad signal. And governments don't do that anyway. By the time they react, it'll be too late. What I'm looking for, and here's where you'll see if I'm wrong, okay? I'll just tell you why I'm wrong. Why I could be wrong. If we see another wave in stocks go down similar to this one, and the next stop on the NASDAQ is 7,000 something instead of 10,000 something, people are going to know we're in a serious crash. We're going to move into a serious recession, and then it's going to be hard to stop the momentum. I think that we could be starting that crash soon, and that's what catches the government off guard. And by the time they react, it's too late. And you got to remember, if they've been stimulating nonstop for 13 years and we keep getting a weaker economy, and that has been what's happened, okay? Ever since the 2002, they keep stimulating more, and the economy keeps falling to new lows, the stock market. And so people are going to start to see this isn't working. You can't keep a dead economy.
The economy is weak and just on the path of complete wreckage. How do you plan to save your assets from going down with the train wreck? Please drop your replies, as well as your comments on Harry Dent's clip, in the comments section below. You can also subscribe to the channel and turn on post notifications so you get notified every time we upload a video. Thanks for watching.